Hey guys, welcome back to the Capital Mindset Show. Just wanted to give you guys a quick update on Walmart stock. So Walmart is a company we've talked about in the past. I will actually show you guys the old video here, and I'll show you a little bit of a snippet, but I encourage you, if you guys are so curious, you guys can go check out that video. So this update will be on Walmart, which updated their guidance yesterday, and you might have seen the stock price actually plummet on that news. It is down 7.71% here today, which is a decently sized move in the grand scheme of things for this kind of company, or for the price action of this company over the past couple years. A 7% drawdown is quite significant. Now, there is something to actually highlight with Walmart, and that is the parts where, let's say CNBC said, Walmart shares slump after retailer cuts profits outlook on inflation concerns. In the very first bullet point, what does that say? Well, it says Walmart shares fell after the company cut its profit expectations as inflation forces shoppers to spend more on food and less on electronics and discretionary categories. This is kind of also a good point to kind of make another point, and that is to say that when CNBC starts talking about something, maybe it's too late. Okay, maybe it is in fact too late, okay, for you to actually make a judgment call, because kind of unfortunate, because you could have been actually understanding this months ago with Walmart. Actually, the data was there for you to actually see, and it is of no surprise. So again, this YouTube channel is like a vlog for me. So this video serves as kind of an update, and so kind of looking back on what I said in the past and see how it's kind of aged up to this point with specific analysis on something like Walmart. And it was just basically on the surface, to be honest. But if we take a look at this video was posted on, you could see there, May 18th, 2022. This is already what the company was really kind of telling us. And also another aspect, we've been talking about it for a lot this whole year, and I actually refer to it in this video about the liquidity crunch and all of the things that brings with the consumer and how they actually change their behaviors and how certain companies are going to suffer more than others, Walmart being one of them. So I'm just going to let my past self say what they want to say in regards to this, but yeah, let's actually just let myself say it. All right, so I'll just play. Oh, let me center it for you guys. All right, so I just want to keep myself there. All right, you guys saw the date already, May 18, 2022, and the title. Income will get hit hard, okay? Because the income might reflect the declining margins because they're not able to pass on all of those expenses to the consumer. And as you know, we've on this channel been talking about the liquidity crunch for quite some time. I know I'm repeating myself a lot on that, but again, it pertains to this. We've been talking about how the consumer is getting squeezed on multiple fronts, from the expenses of oil, expenses of food. These are necessities. If these start to, if the consumer gets squeezed on those other fronts, which we've again talked about in many videos at this point, then you will see the discretionary income or discretionary spending, will come down. And who is affected by that discretionary spending? Well, look no further than Walmart. Look no further than Target. Look at these companies that primarily drive most of their sales still from these other services, right? Or these other products. I wanted to let myself correct there because I actually said the word services, but you get it, products, right? And well, you see, actually, I mentioned Target in there. In this video, I do talk about Target as well. You can see that Target has also fallen in sympathy to Walmart, down 4.65% here today as well. So we can see, again, the companies appear to be trading at much better valuations relative to the past. Just recent past. Let me be very careful how I say that. And then Walmart, it's still on a preliminary look, still trading at a premium relative to the market at 26.16. Upon further investigation, you might see that there are probably some little accounting details that have caused that discrepancy, but for the most part, it is overvalued. And I stick by the same analysis I did in that video, so there really isn't an update on that. It's just this video just serves as kind of an update to look back at what I said back then, kind of show that with something like CNBC and say, okay, well, CNBC is actually now starting to say it, but this information was actually very obvious even back then. So it's not like there was any crystal ball or anything like that. It's just observing what it is that we could see at the present moment in time. And that was, the conclusion at the time. And by the way, this is kind of the true for here on to the end of time. If you have a lot of inflationary pressure on the consumer, that's going to harm them on the discretionary spend at some point if the inflation, or let's use the correct terminology, rising prices in those necessities will actually cause that squeeze if the consumer's income is not rising at the same time. We will call this, for example, the rejection of prices. So when the consumer rejects higher prices, it's because they cannot afford those higher prices. Okay, so it's like, think about it in your own household. If you want to go buy this product and it costs too much money, you just don't buy it because you can't buy it, right? Now, of course, there's some other, added nuances with, will someone extend credit to you? Let's put that to the side. All else being equal, you wouldn't buy that product, okay? So yeah, if you look at Target, like Target is an interesting business compared to Walmart. People call it the bougie Walmart, right? Or they compare it in that way. And Target has a different strategy. We've talked about this in the older video. Walmart has the strategy of, I will give you the product for the cheapest price. If we actually take a look, and I'm very curious, let's see what Amazon is doing today. So Amazon is also down 4.41%. But as we've stated many, 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 many times, and I will state it again here today, that Amazon, we have to remember, is not so much a retail company. This is the only one I do have exposure to of the retail, if you want to call that. But in reality, it is a technology company with a retail business that it also does. And it has, a media brands, etc. And we're going to see earnings from Amazon later this week, which I think is going to be quite interesting. I don't know exactly if I'll be able to cover it because supposedly in this program, Thursday is going to be an absolutely horrendous day. But today is kind of a light day, so I'm able to produce a video here for you guys. And if I can't produce a video on that day, I might do a live stream. So I've been doing more live streams than before to try to do that. And by the way, if you're watching this video and you're new to the channel, come onto the live streams if you get the chance, because that's a place where you can ask questions. I don't, require super chats or anything like that for anyone to ask questions. It's quite literally anyone is able to ask the questions. I do my utmost best for now to get through all the questions and in a timely manner, okay? It can get sometimes a bit hectic, but it's a great place. And also, if you have criticisms towards me, you can also voice them in those live streams too. Those are a really good place for that. It's a really good place for you to voice your concerns, and if you have any, and then we can address them there. And as well as, okay, so getting back to Amazon, as well as what we have to think about with Amazon is the cloud business. And something I've noticed about Google, well, Google's cloud revenue is actually starting to slow down, right? We do see that, right? We do see that deceleration, and that's fine. Law of large numbers. As it gets larger, of course, we expect that to slow down. Amazon's is still king. They are still definitely the king of cloud presently, and that is actually the part of the business that I would be actually looking as the most important component of Amazon, not so much the retail, even though a lot of investors out there do think of Amazon, unfortunately, as a retail giant, because that's how they interact with it. They don't interact with the cloud portion of the business. Now, if I actually take a look at Best Buy, well, Best Buy is the other company that I have voiced concerns about as far as the exposure to the discretionary spend of the consumer. So Best Buy, they sell electronics, right? TVs, consoles, all this stuff that you don't necessarily need, and appliances as well. But with Best Buy, when we took a look at it back in the old video, you guys can go check that out if you're so curious. I said that the valuation is cheap. It's just we have to be also aware of what is potentially to come for Best Buy. What is the environment that we find ourselves in? So it does appear cheap, no doubt about it. If you kind of look at it from just look at this preliminary look. If we just look at the P ratio at 8.02, it's trading at a discount even relative to its peers, or let's say peers, and simplify it a little bit, but let's use Target and Walmart as a peer, for example, when you really shouldn't. But let's say those are the peers. They are trading at a discount relative to them. They're trading at a discount relative to the market. And so you might say, oh, okay, it's cheap. Look at that yield, 4.86%. Dividends, bro. You're getting almost 5% out of Best Buy here. Must be a buy. Well, caution. It might be, but caution. You want to actually consider what's going to happen, 12 months from now, okay? Because the environment for Best Buy might be a little bit problematic, and you don't know entirely the damage that can be wrought not from something in the future. Like, we still don't know. So on this channel, we've been saying that we're more than likely going to head into recession for a very long time, right? We've been saying that. And then usually when you guys ask me on the live streams, you guys ask for, well, how big is the recession going to be? Well, that's where I always say, and I will tell you guys, I do not know. I do not know. I did not know back then. I still kind of don't know now how large this recession will be. However, you know, we've been kind of voicing our concerns of recession for a longer time than, let's say, the media, at least. Well, the media is, I don't know if they're still saying, but I've seen they have been reporting stories where, of course, for I think several months now that we are heading into recession, but they are also saying, you know, it could be mild, it could be not mild, who knows? So that's kind of in the camp that I still am. I don't really see signs right now that it's going to be super severe, but it could be, and it could also just be a mild recession. So that's something you want to consider when you're taking a look at these investments, because you're exposed to that discretionary spend. Okay, I know a lot of you aren't really interested in these kinds of stocks, but there are stocks that you guys are interested in. For example, if we take a look at Microsoft. So Microsoft reported earnings today, and they're down 3.24% here today. Now, earnings were pretty strong, pretty good. So there are some little bit of nuances in the difference between, for example, Microsoft Cloud's, their Azure versus something like AWS or Google Cloud. However, you know, they are showing pretty good strength. I'll say that. Now, one thing that is interesting about Microsoft, or at least the exposure we have to Microsoft on this channel, is through Activision Blizzard. So the investment in Activision Blizzard for the potential of that merger to go through, which I do think I'm pretty confident that it will go through. Of course, you know, the price that we have on, for example, a mental cost basis on Activision is pretty good. Okay, pretty good, because we've been making videos on Activision Blizzard for quite some time on this channel. Well, we haven't made many videos, but the time period is you know, late 2021, and then we had the whole debacle with Microsoft announcing the acquisition in 2022, which was, you know, rather interesting. And so that it's been a roller coaster ride, to say the least. But I'm excited to see actually how it pans out. I'm pretty confident that it will pan out favorably, and then it will yield a very decent return for us in the portfolio. So, but yeah, Microsoft is a company I have yet to do a video on. If I'm being honest and blunt with you guys, just you know, quick analysis, I believe it is overvalued. If I were to shove it into the model, I probably think it will render something close to basically a conclusion that it is overvalued. But there are many other companies. I've told you guys that Alphabet, I have no problem saying that Alphabet is overvalued, despite it being my largest holding. But it's been my largest holding for quite some time. And so I hope that also shows that I'm not, you know, blindly biased towards the companies that I own. I won't say my companies are undervalued just because I own them, right? I will say that they are overvalued, and I might not be selling for various other reasons, right? One thing I want to actually say is I'm very excited now that Google has gone through its stock split, because now I can sell a more flexible call option strategy on the company rather than before, where before just a couple contracts would be basically the entire position. So that would be unfortunate to have to do that. And now I can actually be a little bit more flexible and customize that strategy. And well, of course, that being, I get the good premiums, okay? Because I'm not just going to willy-nilly do it. It has to be the right call at the right time. So yeah, with that being said, guys, thank you guys so much for watching. That's just the quick update. We're at 12 or 13 minutes here, so hopefully it just gives you the quick and dirty on this update on Walmart and Target and these other retailers, as well as kind of my quick thoughts on some of these cloud providers. But with that being said, thank you guys so much for watching, and I'll see you guys on the next one. Bye.